Welcome, everyone. My name is Neal Bawa. I'm going to be your host tonight. This is a Multifamily U webinar. And today, our guest is Scott Maurer from Advanta IRA. I am a IRA customer myself, and so I can tell you that this is unquestionably one of the best ways to invest in real estate. And Scott's company does a phenomenal job of educating people and making them understand how IRA investments work. So with that, I'd like to welcome my guest, Scott Maurer.
All right, thanks, Neal. And I think one thing that we'll set out, obviously, is a lot of people maybe listening tonight don't have really an idea what a self-directed IRA is, and I hope that tonight's class will be I'm pretty sure it'll be extremely beneficial to people who are trying to get a general understanding on what it is to invest your IRA into real estate. Even for those of you who are familiar with the concept or are using it yourself, I hope that you will come away with something as well tonight, because I think that's always a thing I've found over the years. Even people who've been doing self-direction for many years, still get something out of each presentation that they attend. Just a little bit of background on myself. I'm a licensed attorney in the state of Florida. I don't do any legal work for Advanta clients, but I've been with the company since 2006. When I started, that was right about almost the height of the real estate boom in the 2000s, before we kind of went over that cliff a little bit and had that major downturn in the real estate. So I've seen people, not only the upside of people buying properties and finding great value, but also seen people taking advantage of when the prices dipped and the inventory was plentiful all that time to find a lot of good deals. So I've been with the company since that time. Started out helping people mainly with their transactions and their investments, going through the process. Spent the last several years really mainly, though, focusing on the education side, sharing my knowledge, obviously, on self-directed IRAs, and really letting many more people know what it is and what you can do with your IRA account. And we're going to talk tonight, again, about investing your IRA into real estate. And when you talk about what is a real estate investor, that has so many different connotations to so many different people, because when you say investing in real estate, the average person might think that you're flipping houses, or maybe you're just buying rental properties. But as many of you on the call already know, there's so many other avenues you can go down when it comes to real estate. So we're going to share a little bit, obviously, about renting and rehabbing, but they go over a couple other different ways that we've seen people invest in real estate that are still fairly common across the industry of what people are choosing to do with their IRA account. So really tonight, the genesis, the idea behind the seminar is to go through some of the basics of self-directed IRAs, why people are using them, what types of accounts they can use, but then also finish really talking about do some case studies of what would take one person who's got money in their IRA account. What can they do with their account? What are some different ways they can, as quote unquote, invest in real estate, the different, again, ways that you can make your IRA money work in the real estate investment game. Just a quick disclaimer, Advanta IRA does not provide any legal, tax, or investment advice. We do not endorse any particular products or even investment structures, and we're not affiliated with other companies, including any companies or individuals that we have on as guest presenters or that we're presenting on their platform. We provide our information for educational purposes only. If you need some assistance when it comes to tax, legal issues, or maybe even the due diligence issues for making an investment, we do encourage you to seek that outside counsel. We can point you in a couple different directions, maybe with some other professionals that would be able to help you out. But no self-directed custodian is going to give you legal, tax, and specifically not going to give you investment advice and tell you what you should or shouldn't be investing into. But just a little bit of background on Advanta. We've been around for over 15 years. We have over $1 billion in assets. We have an office. Our main office is in the Tampa Bay area, but we also have an office in Georgia. That being said, we work with people all over the country. In this day and age with technology, it's a wonderful thing. I can work with someone just as easily who's the other side of the country as I can someone potentially who's down the street. One thing that we really try to focus on at Advanta is our customer service. We try to give a real personal touch with anybody who has an account with us, gets that one-on-one account manager, someone who knows you, someone whose information you have if you need to reach out. So you're not going to call an 800 number, get passed around. You're going to have a direct contact at our office for anything you need regarding your account.
And I can vouch for that is very important. One of the reasons I work with Advanta is that because of that personalized touch, when we have our offerings, our projects, and our investors are looking to do things in a hurry, it works really, really well to have a single point of contact because things get done so much faster.
Yes, and thanks for pointing that out, Neal. Appreciate it. It's also twofold. If it's your own account, you know that you have that one point of contact, someone who can help you out. And if you're someone who's looking to raise capital, and I'll mention this more at the end as well. If you're looking to raise capital and you're set and you have a bunch of investors who want to use their IRA accounts, it works extremely well for you too, to know that you have one point of contact to get answers regarding your questions. So a couple of things we really believe in strong in Advanta. One is a customer service. The other is education. This event tonight is simply just a continuation of our commitment really to educating people, whether it's a webinar, whether it's a live seminar in one of our offices. We put together networking events. We have an on-demand channel. We record all of the webinars that we do, put them up on our YouTube page. I had Neal on a couple of weeks ago. That's up on our YouTube channel. You can go and check that out. So again, we're committed to education, trying to provide as much information as possible so that you can make that educated decision on what you're looking to do with an IRA. So we're going to start off really again with some basics here. So again, for those of you who are already self-directing, this might be a little bit repetitive, but stick with me. For those of you on the call who haven't heard self-directed IRA, maybe only recently heard of a self-directed IRA, why is that? Why haven't you heard of it before? Very simply, most IRA accounts, a lot of IRAs start as old 401k accounts that get rolled over. But a lot of IRAs are held with banks and brokerage firms who have a vested interest in offering you only to invest in those products that they sell. They sell mutual funds, they sell stocks, a bank has a CD or a money market account. They don't want you to take your money elsewhere. So they're not going to tell you that you can invest your money into real estate or into notes or into multifamily real estate and beyond. They're going to only limit you to what they sell. So they're not advertising the options that you have. IRS regulations allow for a very, very broad range of investments. But again, it's up to each custodian what they're willing to hold. So if you have your IRA with a brokerage firm, they're not going to offer you the real estate. They're only going to offer you those mutual funds, those publicly traded securities that they sell. You have to come to a company like Advanta to be able to invest your money into other assets and keep your account tax protected. That's the important thing as well. A lot of advisors out there, if you ask them about buying real estate with your IRA account, will caution you that you're going to pay penalties, you're going to pay taxes to pull the money out of your IRA as a distribution to then go buy that rental property. And in reality, what they don't understand is that you can actually move the money from one IRA account with a brokerage firm to an IRA account at Advanta. No tax consequence to move the funds, and then even no tax consequence at all to then buy the real estate as well. That's what a self-directed IRA does, is help you preserve that tax status of your IRA and simply choose a different investment for your retirement account. And so the reason people choose to self-direct, really people fall into one or more of the following buckets. For some, and I'm probably many of you on this call, if you are already a real estate investor, someone who already believes strongly in multifamily or in rehabs or in rental properties, your IRA is simply another source of capital. You don't have to go to your friend. You don't have to go to a bank. You don't have to go through your savings. You can simply use your IRA funds. Your money's in that account. The only person that has to approve it is you. You just decide, hey, I'm going to use this money for my next real estate investment. So for some people, they're choosing the self-direct because that's where the money is. For others, it's the tax benefits. Okay, when I invest in my IRA, the rents, the dividends, the profits I make are going to stay tax deferred or possibly tax free if you have a Roth IRA account. So for some people who are investing, I don't want the income now. I'd rather just keep deferring that money into my IRA account. I'm going to get some fantastic returns for my next project. Let's just have this go back and I'll build my IRA that way rather than leave it in the market. And that's really probably the other main reason we see people self-direct really has to deal with the stock market. People who are not comfortable with what's going on in the market on a day-to-day basis. They don't understand the ups and downs. Doesn't make sense to them. Mutual funds or stocks feels truly like throwing that proverbial dart at the dartboard to pick an asset. So for them, I don't want to be at the whims of somebody else in a market that I don't understand. I want to take my own control. And that's really what the title of tonight's webinar is get control. Take control of yourself. Find the assets that you know, that you understand, and not be reliant upon a market that you just simply don't understand or what you're really getting out of it. So the important question, what accounts can be self-directed? Answer, any type of IRA, whether it's traditional or Roth, or whether it's a SEP or a simple IRA. So a SEP and a simple, for those of you who are unfamiliar, if you own your own business or you're self-employed, a SEP or a simple IRA work very much like a traditional IRA. They're tax-deferred entities, but it allows you to contribute a lot more money than this traditional or the Roth do every year. With a traditional and Roth, you can only contribute out of pocket $6,000 a year as a new contribution to the account. With a SEP and a simple, you can contribute quite a bit more than that. If you are self-employed, we also offer an individual 401k plan, which is quite beneficial for those of you who might be looking to leverage properties or who want to put, again, sock away a lot more money in a given year into your retirement account. Those plans offer you the bigger bang for your buck. Also, former 401ks, 403bs, any employer's plan that you have or somewhere where you no longer work for that company, you could take that money, roll it over into a traditional IRA, there's no tax consequence, and then choose to self-direct it and choose to buy your next real estate investment with those funds. So again, tonight's title was Get Control and Use Your IRA or Your Old 401k, which I'll use 401k like your old 401k. I'm including the 403bs, the 457s, the TSP plans under that same umbrella because they're all similar in that they're former employer plans that you can use. The only accounts that you probably can't or at least have restrictions on being able to self-direct are any current employer plans. So if I'm working for a company now that is offering me my 401k, they may restrict my ability to move the money so long as I'm employed there. That's the only restriction. But if you have any account with the designation of an IRA or it's an old employer's plan, you no doubt can self-direct those funds into your next real estate investment. Now, the differences, again, between most of these accounts are simply how much you can put in out of pocket. New contributions, there is no limitation on what you can do with the money that's already in there. You can move that money into different investments. There's no limitations on any earnings within the account. Now, the one account that does stand out, for those of you who are not familiar with a Roth IRA, the Roth IRA is a tax-free IRA account. If you have one of those accounts, it means you did not get an initial tax deduction like you do for making contributions to 401ks or traditional IRAs. You forwent that initial deduction. Your money is actually going tax-free in a Roth. So if you have a Roth, you probably understand that, and that's why you have the Roth. Know that your gains going forward are never going to be taxed again. That's the beauty of that account. If you have more questions on these particular accounts, my contact information are on the end slides. Please reach out to me. I don't want to spend too much time on those individual accounts. Just know if you have an IRA or an old 401k account, you can certainly self-direct it. Now, getting that money into a self-directed account is a pretty simple process. It's something that we help out with. It's either by doing a transfer or doing a direct rollover. And again, a lot of people sometimes are concerned that when I have my money in my brokerage account or I have my money in my bank IRA, how do I get that money to you? And then once I get the money, am I going to have any tax consequences for that particular transaction? And as long as you never touch the funds yourself, it is a tax neutral movement of money. So if I have an IRA at a brokerage firm and I want to invest in Neal's next multifamily project, or I found a house down the street that I want to purchase as a rental property, I can simply transfer money from my brokerage IRA into my new self-directed Advanta IRA with no tax consequence. And you can do as many transfers between accounts as you'd like. Again, as long as you don't touch the money, there's no limitation on doing that. So transfer is from IRA to IRA. Direct rollover is simply when you have money in that old 401k or old 403b account. When you move that money and do a rollover to an IRA account, again, you're not touching the money, and because you're not touching the funds, it's also a non-taxable movement of money. Typically, we can accomplish a transfer or a rollover within 1 to 2 weeks. Sometimes it does take a little bit longer, depending on who the other custodian is. But just know, again, if you have those IRAs, you have those old 401ks out there, it's not taxable. There's an easy way to move that money between those accounts, and that's something we're gonna help you out with. So what types of assets? So we kind of know already what types of accounts we can use, and we know we can move those monies without tax consequences into a self-directed IRA. Now that I have my money in my account, what can I invest in? We talk about real estate assets. Again, I mentioned at the beginning, if you said, I'm a real estate investor, to many people, that could be many different things. I mean, you could buy, just long-term buy and hold rental properties. You could buy, VRBOs or beach rentals or mountain rentals on short-term basis. You could be rehabbing properties. You could invest in mobile homes. There's actually a guy in my local area here who's wears shirts all the time. So my wife buys mobile homes. That's his particular specialty that he focuses on. You could invest in tax lien real estate investment trusts, and certainly, as Neal's going to share with us here in a little bit as well, and many of you on the call know, you can also invest in larger commercial properties, multifamily projects, private placements. Again, these are all real estate investments. So when you say I'm a real estate investor, to me, if somebody tells me that, I need you to be more specific and kind of let me know what particular asset here that you're looking to invest in. We also see a lot of paper assets, people investing in mortgage loans, investing in tax liens, unsecured notes, a lot of other different types of assets. And in the realm of self-direction, you can invest in many other things that are not even real estate related at all. Farm animals, movie projects, precious metals, cryptocurrency. Again, the thing that all of these assets have in common is that brokerage firms aren't willing to hold them. You're not going to find in your Morgan Stanley, your Charles Schwab account that they're going to hold typically a rental property or a multifamily real estate investment or some commodities. It's just something they don't do. So you have to have a self-directed IRA willing to hold it. So all these different types of assets certainly qualify. And in fact, when the IRS created IRA accounts, they only laid out a few rules on things that you could not do within the account. So there's certain prohibited investments that the IRS has said, we're not going to try to make a list of all the different things you can do in your IRA. We're simply going to say here are the few things that you can't do. There's two types of prohibited investments themselves. That's life insurance and collectibles. You cannot buy either one of those assets inside of an IRA. Your collectibles would be your artwork, antiques, things of that nature. And you cannot use your IRA to benefit yourself or a disqualified person. And you'll see the list of disqualified persons there on the right side of the screen. The disqualified persons are you, your spouse, your parents and grandparents, children and grandchildren, your son-in-law and your daughter-in-law, or any business or entity that is owned or controlled by one of the above. So the important thing when you're thinking about disqualified persons, the thing to remember is that the IRS treats your IRA as its own separate legal entity. So your IRA cannot transact with, or you cannot use your IRA to benefit any of those disqualified persons. So for instance, when we're talking about real estate, you cannot have your IRA buy or sell with a disqualified person. So if you own something already, you cannot sell it to your IRA. You cannot lend money from your IRA to or from a disqualified person. You can't buy real estate that you intend to live in, that you want a vacation in. It's got to be strictly for investment purposes. And no disqualified person can perform any work on the property. So I buy that fixer-upper down the street from my house. I can't hire my son or his company to actually come in and do the work on it. You also can't use third parties as intermediaries. I've had this question countless times at Advanta. I want to lend money from my IRA. I want to lend it to my son. He can go buy his own house. I inform someone you can't do that. So the next question is, can I lend the money instead to my friend Bob, who's going to in turn lend the money to my son? That's prohibited as well. Now, important to note that siblings, your brothers and sisters, aunts, uncles, and cousins are not disqualified. If you're investing with those individuals on a fair market basis, that is possible. So we try to keep this slide short because it's important to note these are the only two things you can't do. So if you're looking at buying properties, renting it out to third parties, rehabbing, or investing in a multifamily project where you're just a passive investor, your IRA is just going to buy in on a units basis to be part of a much larger deal, these rules never come into play. These rules only come into play when you're trying to do something with property you already own, or you want to be overly involved, or you're trying to use it to benefit one of your family members on this screen. That's when it becomes problematic. When we talk about pure investment, the types of investments obviously that you can find through some of your local real estate investor clubs, or again, something Neal may talk about here in a few minutes, those investments you're never going to run into issues with the investment restrictions. The IRS, these are the only limitations that they have when it comes to investing in your IRA account. No life insurance and collectibles, no dealing or benefiting disqualified persons. I'm going to go with some case studies here in just a moment. Just to let you know, when you're looking to get started, it doesn't take long at all. Opening up an account is filling out paperwork that takes 10 to 15 minutes. Getting your money funded by either transferring or rolling over from a 401k anywhere, again, from a few days to a few weeks, just depending on where that money is located. And we can usually give you a pretty good idea when you tell us who your other custodian is or where that money is coming from, how long that's going to take. And then from there, it's start investing. You have your account, you got the money there. Tell us what you want to buy. Real estate, mortgage notes, private placements. And quite often, honestly, a lot of people come to us already with the investment in mind. They've listened to a seminar they ran, they saw a property down the street they want to buy. Then they find out they can use their IRA to do it. So they kind of come to us with step 3 already done. They're already locked in, loaded, know what they're investing in. Let's come back to Advanta to make this happen through an IRA account. So this time, Neal, I'm going to kick it back to you so that you can share a little bit. We'll come back and do some case studies.
Absolutely. All right, let me share my screen. And there we go. So we've been talking about all the different kinds of investments that you can use your IRA money for. And here's one kind of investment. My company provides various multifamily investments. We're actually in the future also going to be talking about hotel investments. But the vast majority of our investments are multifamily. Now, keep in mind, these are not endorsed by Advanta IRA in any way, so keep that in mind. But Advanta can process these for you if you choose to invest in these. So this particular opportunity happens to be in a up-and-coming metro, Tucson in Arizona, which is ranked now 3rd for rent growth in the United States. Why? Because it's gaining a huge number of retirees, and it also has ASU, 55,000 students from Arizona State University. What we've done here is we purchased a tired old property that had poor management, deferred maintenance, very dated interiors, but it is in an excellent area. So this is a C property in a B area, and what we're doing is we're applying our game-changing efficiency methodologies to do renovation and leasing on this particular property. And here's a property that is a couple miles away that we've completed. So this is what the property looks like at completion. When we started, we were at 0.5% cash on cash. Now we're at 27. This is not the property that is open for investment. This is a past case study. And our annualized returns that were projected on it were 19, and we ended up at 30% annualized. And we were able to take the rents from about $530 all the way to almost $800 per unit. And at the same time, we took double the occupancy from 45% to almost 96%, which is considered pretty much perfect occupancy. And we did all of that with a renovation budget of $20,000 a unit, but the actual final completed budget was $15,000 a unit. So this is what the interior renovation looked like. This is what the actual properties units currently are. And this is an actual unit of another one of our properties, Equinox on Prince. And you can see stainless steel package. There's wood plank style luxury flooring, new cabinetry, quartz countertops, and there's a lighting package, an LED lighting package that's in there. When we do this, it allows us to significantly increase or improve the tenant base and to get much higher rents. So that particular project is open for investment. If you're interested, let us know in the poll at the end. We also have a new construction project. This is in Buffalo, New York. It's student housing. Keep in mind that we do have a recession coming up in the next 2 or 3 years, and student housing tends to be very resilient because millions of people go back to school. This happens to be graduate student housing, so no frat parties here. These are older students, and we're going to have a Starbucks right here, 4 floors, roughly 355 units. It's built next to one of America's oldest train stations, which is why you see these LED lightings running down. That helped us get approval from the city, and we called it Rails on Main, which was the name of the station, which doesn't exist now. But it existed 100 years ago. What's really nice is that this particular project we've done environmental cleanup, and so we have 13 years of tax incentives and property tax incentives, which brings us to over a 23% average projected annualized return. And this is what that finished project will look like when we're done. So here's a day picture of the project. This is an existing building that we're reusing, and the orange building is one that we're pretty much building from scratch. And the inside units are called micro units, so they're about 300 to 400 square feet each. All fully furnished units, so ready for students to move in. Once again, a graduate student housing project. So if you're interested in these kinds of projects or our upcoming projects, for those of you that are looking for tax deferral or forgiveness, I'm sure you've heard of something known as opportunity zones. They're part of the new 2018 Tax Reform Act. We have about 5 opportunity zones projects for those of you that are looking to A, defer, and B, completely forgive your taxation. And you can use your stock gains and your real estate gains for opportunity zones projects. So if you're interested in that, please reach out to us. Would love to talk with you about these projects and also the opportunity zones project. And now back to Scott.
All right, thanks, Neal. I can almost attest that my niece actually is looking to go to college here very soon, and the dorms actually are sold out. So she's going to have to look for other housing to begin with. So yeah, that's definitely, student housing is certainly resilient.
It is.
All right, well, so we've kind of set the table so far and finish off the webinar here, the last half of the webinar, talking more about putting the case study together and really what it looks like and what some of these investment options, how it works. So again, we've talked about, what types of IRAs, any type of IRA, old 401k plan, you can move that money without tax consequence, you can make the investment without tax consequence. And the benefits are that when you make these investments through a self-directed IRA, not only are you getting the tax benefits, the fact that you're not going to pay taxes on the income that comes into the IRA. You're not going to pay any taxes on the profits that you make on the sale of a property. It's all coming back into your IRA, tax deferred or tax free. So not only are you getting those tax benefits, but also, again, you are in control of the investment. Again, Advanta IRA doesn't sell any investments. No self-directed company sells investments. Advanta simply provides a service. When you want to invest in real estate, or you want to invest in notes and mortgages or multifamily, you are finding the property, you're doing your due diligence, and you're in control exactly what your IRA invests into. So what we're going to do now is go through a couple different investments that you can make in real estate, again, using your IRA account, again, to demonstrate investing in real estate, that term. There's so many different things, and we're not going to even scratch the surface of the different things you can do with when it comes to real estate. But we're going to use the same set of facts, and this we're going to have our case study is John. John has an old 401k through an old employer and a couple other IRAs as well. Totals around 200 grand within those accounts that he knows he can use towards investing in an alternative asset, and he really is interested in real estate. So he knows there's rental opportunities, there's multifamilies, other people, other investors he could lend money to. And again, the income from any of those investments has to go back into the IRA, and any expenses related to those investments get paid out of the IRA funds. And the net at the end of the day is what's staying in his account and how his IRA is then going to grow. And again, Advanta IRA's role in this is simply as the administrator of his account. We're going to make the investment at his direction, and then we're going to receive and deposit the money coming into his account. We're going to pay those bills out of his IRA. So we're going to keep track of his records. We're going to do the IRS reporting that's necessary each year to make sure his IRA is properly reported with the IRS. And we're simply going to do kind of what John tells us to do. As long as it's not buying collectibles and life insurance, he's not looking to do something else with a disqualified person, he's going to run the show, and we're going to help do our best to keep him in line and really do all the reporting and record keeping that's necessary. So John, again, going to find the investment, going to do his due diligence. So he's got 200 grand to work with. The first case study we'll go into is John buying just a single family rental home. So initially, John finds a property, finds an investment. He's going to get the paperwork from us to open up the account. We're going to work with him to get the application document completed, also help him and give him some guidance on how to roll over that old 401k, and also how to do any transfers from other IRAs as well into his account. So we're going to get that established, receive the incoming funds, walk him through the process. But again, John is going to be in control ultimately of the investment, the terms, especially the location of where he's investing. If it's going to be a single family home, where does he want to buy? What does the neighborhood look like? What are the average rental rates in the neighborhood? That's all up for John to do his due diligence and be comfortable with making that investments. Now, obviously for John, one of the benefits potentially is only dealing with one tenant, one structure. He's got one house to worry about, and that's it. Now, that can also be a downside, especially as you're someone who does more multifamily. You'll know that when you have multifamily investments, you have many different tenants helping do the cash flow each month. So losing one tenant doesn't necessarily kill your cash flow on a monthly basis. But single family rental home, if you have a good solid tenant in there, then that's only one person that you're having to deal with. Additionally, John, when he's buying this single family home, it's just him. He's got enough money in his IRA to go out and find that single family home. Doesn't have to have other partners, doesn't have to use any kind of financing, really, unless he wants to do so. So first property John sees, the purchase price, you can see $150,000. He goes knocking on doors, works with his realtor to find that particular property. Again, our role with John will be that when he finds this particular property to purchase, we need to work with him and make sure that the IRA's name is going to be on all of the investment documents. When you're buying a single family home, that starts with the contract and goes all the way through the closing process. The deed, the title policy, the closing statement needs to show and demonstrate that Advanta IRA, for benefit of John Smith's IRA, is the purchaser, right? So this is not John buying the property as an individual, which if he was buying this property is simply in his name and pulling money out of the IRA to buy the property, that's a taxable event to him. That's a distribution subject to penalties and other taxes that his IRA would be subject to, or he would be subject to in pulling this money out. So that legal wording on that slide, Advanta IRA, FBO, for benefit of John Smith's IRA, that's what's going to go on any investment that John ever makes in his IRA. That demonstrates to the IRS that this is a tax neutral event for John to buy this property as an asset inside his account. So very quickly, if he's buying this property for rent, $150,000 purchase price, let's say he gets $2,000 a month in rent from his tenant. Let's say he averages $750 a month in expenses. He's going to end up netting about a 10% return right back to his IRA account on a yearly basis. After 3 years, obviously, he's had about 45 grand of accrued rents simply back into his IRA account. So he can just continue to rent the property and just continue that cash flow, just kicking that in each month. It's basically a stock dividend almost every single month back into his IRA, but it's a property that he owns, he can control, he knows the tenants, he knows the neighborhoods, he knows what work needs to be done. The only thing he needs to make sure is that his tenant is paying on time and that all the bills and all the expenses are being taken care of as well out of the IRA account. Again, directing us at Advanta to pay those bills as they come up and receive those rents into his account. So that's kind of a bread and butter investment that we see a lot of clients do. We've had clients who've held the same rental property for the last 15 years inside their IRA account. They bought the property, the market went up, the market went down. They've continued to get rents into their account the whole time. They're not necessarily worried about the appreciation or making a quick buck on a sale. They know that they can just get that consistent cash flow back in their IRA and don't worry about the sale price down the line. Now, for other clients, they're really looking to use their IRA in a circumstance where they could buy a property for that quick buck. They are people who rehab properties, or maybe looking to get into real estate and figure this is the best way for them to go. Again, same situation though. The client, in this case, John, has $200,000 to work with. It's going to be up to him to find that property that he wants to buy, find a project that he can purchase, that he's got enough money in his account, not only for the purchase, but then for the rehab as well. And then make sure he's got third parties that he can hire to do the work. Again, John, if you're rehabbing a property, one of the downsides for some people is that you can't do the work yourself. You do need to hire a third party to do that. And again, for some people, that's the benefit. They don't want to get their hands dirty. They don't want to be involved in the rehab. Let's just hire it out. I'll have somebody else do it. But for those people who want to be involved, that is something you can't do when it's rehab. Your IRA does have to pay third parties to do the work. So John's going to be able to find the property. He's going to be in control to identify the property, get it funded, get it closed in the IRA, going through that same closing process. And again, that's something that Advanta and your account manager will walk you through and be involved with the whole way, is making sure that property is titled in the name of the IRA, making sure you've approved all the paperwork and all the documents as well prior to closing. Now, in this case, yes.
Quick question. Sharif is asking, who gets the depreciation benefits if the property is owned by the IRA?
Great question. And the answer is, when your IRA owns real estate, you do not get any depreciation because your IRA is not paying taxes on the income. The IRS will not allow your IRA to take any depreciation. And since you personally do not own the property, you personally cannot take any depreciation. So some CPAs, that's one reason some CPAs can be at times, I wouldn't say against a self-directed IRA, but that's a negative for them, and there's no depreciation. The upside is your IRA is not paying any income. And just kind of a quick tangent to that, Neal, a lot of people, when they're considering buying a property, if they're looking at using either IRA funds or personal funds, sometimes that is a tax decision. What kind of tax benefits do I get personally that I may not get in the IRA, or vice versa? For most of our clients, especially those real estate investors who are looking at buying properties, whether it's rehab or a multifamily deal, they're looking at it from the standpoint of, I'm John, I have 200 grand in my IRA. I want to make that money grow. I want to be in control. They're not necessarily worried about the tax benefits of the investment. They don't care that they don't get depreciation, because by pulling the money out into a self-directed IRA, they're in control. They're going to make their money grow faster, higher, better when they're controlling it in a real estate investment than they are in a mutual fund or stock investment. So that's kind of my slight tangent there, but that's a great question.
Mm-hmm. Got it.
So again, John has the money in his IRA. He's going to buy the property. He's got enough in there to repair. You can see the numbers on the side. He bought the property for 100 grand. He puts $40,000 of repairs into it. Again, hiring third parties, and his IRA has to pay for all of those fix-ups from the cash inside of his IRA. When his IRA then turns around and sells the property and flips it for $180,000, again, no taxes due to his IRA. All of that profit, all that sales price simply comes back in to his IRA account. If you did this outside of an IRA, he would have taken, that would have been a short-term capital gain or ordinary income to him. You do it inside the IRA, there's no tax consequence for making that investment when you're buying that rehab project. Scott, one more tax question.
Sure. Richard says, so can a partnership or LLC operating agreement not assign all of those unused depreciation benefits to other non-IRA partners or members?
That's a question more so, again, as I mentioned at the beginning, we can't give legal, tax, or investment advice.
Yep.
That would be a question for your CPA or maybe a tax attorney to tell you how you can structure that investment. Now, if you did have a partnership where your IRA owns a portion of the property, and then maybe you personally or somebody else personally owns the other portion, certainly that partner who doesn't have the IRA involved may be able to take depreciation and other tax benefits for themselves. But that's a question more for CPA, if you'd really be able to assign all those benefits. I'm guessing the IRS might have somewhat an issue with it if it's not done properly. But that's a question we can't really answer in particular.
Mm-hmm. Yeah, clever question though, Richard. Certainly would
Yep.
be something that you should check out with your CPA.
All right, so the two examples we went through here, buying rent single family homes to, your IRA is going to be on title. And again, it's your property. So the plus side, you're in complete control of this property. The downside, your IRA funds are tied up into this one particular deal. So this deal doesn't go right for you. And again, you have no other recourse for getting out of it. It's your IRA owns that property. It's going to have to sell it. So if you own rental property or you own rehabs, again, your IRA has to pay for all the expenses. It's going to receive all the rent proceeds. Again, your IRA is the owner. You're responsible for finding the tenants, making sure the proper maintenance is performed, hiring those contractors, and again, making sure you don't do anything that could be considered to be prohibited. Again, any of the maintenance services, the IRS considers that a contribution of your labor to your IRA account. And the IRS only allows contributions of cash. So when you pick up that hammer, you change those light bulbs, you mow the grass, you are giving a benefit to your IRA account on an individual basis. So if those are things that concern you, that's why people generally speaking don't get involved in maybe in buying and having your IRA actually on title to a piece of real estate. Now, you certainly could hire a property manager, someone else who's going to do a lot of those, perform a lot of those functions for you, and get that arranged. That's one way people still invest with their IRA and are able to do so more comfortably by having that third party involved. So I'm going to go through two more case studies here and kind of illustrate other things John could do. Now, again, just mentioned, some people don't like the idea of buying and investing in their own property. Where their IRA is just going to own it, whether it's for rental or rehab, they're more comfortable being a step back from the transaction. So these last two examples, I think, will illustrate a couple different ways.
Scott, we
Yes.
want to finish around 6:50, so we can do a poll. So
Okay.
about six more minutes.
Oh, sure, no problem. I'll be done. So again, these last two case studies really are how you can have your IRA invested without being much more passive. And one of them simply being a private lender. If you think about in this particular deal, John finds Andrea who's looking to buy money looking for money for her next rehab. So she's looking for private money, doesn't want to go to a bank. She can simply go to John. John has his money in his IRA. He can be her private lender. So instead of going, again, to a hard money lender, going to a bank, Andrea just borrows money from John's IRA. She can sign a note and a mortgage to John's IRA, so his IRA is protected, and the payback on that loan is really an agreement between John and Andrea what he's going to accept. So she needs $100,000, and they agree that she's going to pay him a 6% interest on that money until it's paid back. And additionally, when she sells the property, because it's just something she's looking to flip, he's going to get 1/3 of the profits that she makes on that deal. That's the deal they come up with. You could be, when it comes to these terms, the interest rate, the equity participation, even if there is any, is all between the borrower, obviously Andrea, deciding what she's willing to pay, and John, obviously, on what he's looking to get, and have a meeting of the minds to determine that particular deal. So going to be a mortgage on the property. John's going to approve the documents that his attorney prepares. And then when that loan pays off 4 months later, he's going to get, again, 1/3 of the profits plus 4 months of interest. So his IRA ends up making $12,000 on a deal in that 4-month period of time. He gets both his portion of the profits and the accrued interest during that time. So the benefit here is John's IRA is simply the lender. He's not having to find the tenants. He's not having to find the contractors. She's making the decisions, and he's sitting back in a more passive role. And the other area we see a lot of people doing much more passive investments is in the multifamily and commercial space, where in this particular situation, John meets Randy. He has a private offering. He's going to purchase and remodel an apartment complex, needs money from a number of different investors, and forms his own syndication and private placement to do so. So Randy's going to be raising a lot of capital, and John has provided then the subscription documents, the prospectus lays out what Randy's plans are for this investment and what kind of returns or what kind of risks are involved that John can expect. So again, John is going to take his $100,000 or $150,000, simply put it into Randy's project, again, as a passive investor. He doesn't have to find the tenants, doesn't have to deal with the maintenance. Again, the upside of investing in multifamily is that when you have vacancies in a couple different units, it doesn't really have the same effect it would if you go a month without rent in your single family home or your single family condo. I've heard one of our clients that invests in multifamily projects and in apartment investing, it's his mailbox money. He puts the money in the investment, and then once a month or once a quarter, he goes to the mailbox to get his dividend check that's going to go back in his IRA account. So again, our role at Advanta, not to review the subscription documents for suitability. That's John's role, to make sure he's comfortable with the deal. Our role is to make sure that the subscriber's name is going to be his IRA account, that the tax ID number used is our trust tax ID, not his social. So all those dividends that come back each month or each quarter are reported to his IRA. We'll sign the documents, John approves them, and ultimately, again, the future dividends are simply going to come back into John's IRA account. Okay, the gains are coming back to his IRA. It's not included in his income. And whenever John's IRA exits the investment or the property sells or is refinanced and he's paid off, again, all of that comes back in his IRA with no tax consequence. Again, John, the benefits of in multifamily, similar to doing the private lending, he doesn't have to be involved in the day-to-day processes. He's placing his money with other people that he trusts that are going to do their due diligence and make an investment and then pay him back simply a dividend back into his IRA account. Now, if you're looking to use IRAs or you're wanting to raise capital, why are IRAs a good source? Number one, if you're raising money from other investors, you get repeat investors. Just go to your existing client base, your existing investor base, tell them about how they can use their IRA to invest with you, open up more capital. A lot of people like using their IRAs for these investments as well because they're not planning on touching their IRAs for a number of years anyway. They don't want to dip into their savings account to buy that next rental property. They might need that savings account if they lose their job or something else happens, a medical emergency, but they're not expecting to touch their IRA money anyway. That's why IRAs become a good source then to fund your next deal. And money people can get better returns. You know, people are afraid of the stock market, think their only alternative is to put it in a money market or a CD at a bank, which isn't paying very much. Instead, place it in a real estate investment that they can control or that someone else is going to pay them a much better return. And again, there's no outside approval needed. If I have an IRA account, I don't have to go to a bank. I don't have to get the approval of my financial advisor. I simply need to make the decision myself that I want to use my IRA for the next investment and then make it happen. And again, using Advanta IRA, we handle all the record keeping and the custodial functions for your IRA. We don't have a lengthy approval process. If you're making an investment, our role is to make sure your IRA is properly titled and make sure you approve of the documents. Like I said, I've been with the company for over 13 years now, many different types of investments. Again, real estate investments, to me, you have to be more specific because it can be anything from tax liens to multifamily to single family properties and much more. We give you a private account manager. We make the process easy. And our fees are just a flat fee. It doesn't matter how much you're investing with us. If you're buying a property for $100,000 or $500,000, you're going to pay us the same fee. It's the same amount of work involved. So I think we have hopefully a lot of benefits. Again, hopefully everybody on the call learned a lot today. Here's my contact information. If you have questions specifically about the types of IRAs, a potential investment you're considering, give me a call, shoot me an email. I'm more than happy to spend some time on the phone, walking you through the process, letting you know the things to be on the lookout for, and certainly answering any other questions that you have.
Fantastic, fantastic work, Scott. That was a terrific walkthrough. I'm going to throw up a poll for all of you, so please don't leave until you've answered our poll. This will take you about 30 seconds. And I have a few questions from people. Let me throw those up for Scott. And by the way, even though Scott and his company are prohibited from endorsing our projects, I have no such problems. And I can tell you Advanta does a really great job. We work with 14 or maybe 15 different IRA providers, and they're terrific. Their fees are very, very reasonable. I can't say that for all IRA providers, just to be honest. So I think if you're looking to open an IRA account, you couldn't go wrong with Advanta. And I say that as somebody that has worked with a number of them. All right, so we have people that are actually answering our polls. And there we go. Excellent. Okay, looks like everyone's answering all of the questions. Let me ask this question. Nagesh says, what is the fee for your IRA account, Scott?
Yeah, on an annual basis, we charge, it's a flat $295 a year to hold an asset, do all the record keeping, do all the reporting. We do have, it's about $150 or so to get the account opened and get your investment made. So those are one-time fees, about $150 to get started, and then just a flat $295 a year to hold your investment, again, regardless of value.
Got it. Okay. Why would someone borrow from a private lender instead of a bank? I'm not sure that's an IRA question, but you want to take a shot at it?
Yeah, I'll chime in. You can chime in too, Neil. I mean, a lot of people just stay away from the banks. They have different underwriting requirements, different lending parameters on what types of properties they might be willing to lend on. So for a lot of real estate investors who are looking for quick money without having to go jump through all those hoops, they're willing to pay more. They're willing to pay a higher interest rate. They're willing to pay different types of returns to not have to go to a bank, which they look at as a crapshoot. If they're even going to get approved, especially people who have a number of properties. At times, the banks actually look away from those types of individuals, so they can just go to a private lender instead, and not have to jump through those hoops and get at the end of the day for them get the same result. And that's, I got money to do my next real estate deal.
Fantastic. Very involved question here from Michael. I'm retired from public safety in my mid-50s and currently taking monthly withdrawals from my employer 457 with no penalties. Yes, I am taxed. If I roll over to a self-directed IRA, would I still be able to withdraw monthly without penalties and still buy rental properties within the IRA?
That's a great question, and the answer is yes and no. Now, one difference that 457s have over 401ks and IRAs is you can actually take distributions after age 55 without a 10% penalty. So with 401ks and IRAs, you have to wait till you're 59 and a half. So if you're not yet 59 and a half, but you roll that money out of the 457 to an IRA, you now would have to wait until you're 59 and a half to take out a penalty-free distribution. So that is one huge difference with the 457 that IRAs and 401ks don't have. Now, once you're over 59 and a half, then it wouldn't matter either way because you wouldn't have a penalty. So that is a great question and definitely a consideration if you have a specific 457 plan, only because the distribution rules are a little bit different from that type of plan.
Got it. And then is there any way to borrow from my IRA account for down payments towards primary residence without penalties or for a shorter period?
There is. That's something we don't cover because it doesn't have to be a self-directed IRA to do so. It's just an exception to the 10% rule that the IRS has. So again, if you're under 59 and a half and you take a distribution from your IRA, you're hit with a 10% penalty. And there are certain exceptions to that rule. One of them is if you meet the qualifications of a first-time home buyer, you can take out up to $10,000 from your IRA to use towards that purchase and not pay a 10% penalty. But that's only for you buying your own primary residence. It has nothing to do with investing in real estate from that standpoint, nothing to do with self-directed IRAs. But you can, again, that's one exception to the distribution rules.
Fantastic. Well, that was the last question. There's a number of people here that are interested in working with you. I think there's 9 of them that are interested in working with you, Scott. So I'll send that information over to you. Thank you all for joining us. I would like to, both of us, Scott and I, would like to wish you a wonderful rest of your evening. Thank you, and keep joining us for more webinars on MultifamilyU. Thanks so much.